Ladies and gentlemen.
Welcome to the BlockCrunch podcast, the go-to podcast for investors and builders in crypto.
This episode of the BlockCrunch podcast is brought to you by CoinFlex. Stick around to learn more. And hey everybody, welcome back to another episode of the BlockCrunch podcast. Today I'm super excited to have Andrew Steinwold, managing partner at Sfermion, which is a fund that's exclusively dedicated towards NFT and Metaverse investing, on the show today to talk to us about his framework when it comes to NFT investing, as well as what trends he's excited about. Now, Andrew is an investor in companies that you've heard of before, like OpenSea, Artblocks, and SuperRare. I'm really excited to dive into all of those. So Andrew, welcome to the show.
Jason, thank you so much for having me. Been a listener for quite some time, so really excited to chat.
Yeah, definitely. I appreciate you coming on. So I guess for those who are not already following your amazing Twitter profile, what is Sfermion and what's the story behind it?
So Sfermion is an NFT-focused investment firm, and we actually have two different funds. One fund that's focused on direct NFT investing, and the other fund is focused on venture. And we felt like we needed to have this multifaceted approach because the NFT ecosystem itself is not only very broad and kind of can often be confusing at sometimes, but also if you're just looking at the from a venture angle, you're losing out on the returns that can be generated from the asset angle, and vice versa. That the assets are really important as well, and also the strategies inform one another. They're pretty symbiotic in the sense that what makes a really good or great NFT to invest in. Oftentimes, it kind of funnels back to the fundamentals of the project itself. So the team, the product, the market, et cetera, kind of those venture fundamentals. And then, I think that going forward, I think most people involved with NFTs will end up being involved at both the venture level and also the asset level.
That's really interesting. And we're definitely going to talk about that because we've discussed this on the show a few times, like whether you think a basket of NFTs outperform a basket of NFT related companies. But before we do that, we took a look at some of your investments, and I think there's about 50 companies so far. I think 11 of them are infrastructure related. There's 12 of them related to games, and I think 27 of them related to marketplace. These are studios, DeFi rails, DAOs, and so on. Would you say that, the infrastructure, games, and I guess the DAO infra / additional value add infrastructure, are those the three major buckets that you guys focus on?
Yeah, we purposely put it quite broad. This is through our venture vehicle. Our NFT vehicle, we don't actually talk about necessarily what we're investing on the asset side, not because we're trying to be super secretive, but just because the markets are so thinly traded that we want to be more cautious about when we speak about things that on the NFT side. Because if we say something, then maybe there's like a daily liquidity of like 2 or 3 items sold per day or something like that, and then that could mess up the markets there. On the venture side, yeah, I mean, we put a broad scope. We're like, hey, let's do NFT infrastructure, right? And I guess the main areas of focus within that infrastructure bucket are really financial infrastructure, social or experiential infrastructure, and also gaming infrastructure. We also participate in direct gaming deals. The reason being is because we feel like games can actually, you can end up investing in a game that ends up building out its own infrastructure. Like, for example, Axie is probably the best example for this. Started with a game, great customer acquisition funnel right there, generating, tons of revenue, have a ton of users, from day one to use your actual products and infrastructure that you're building out. And they end up building, marketplace, a wallet, a blockchain, a DEX, like all this different stuff that then they're productizing and launching that to the broader community to build on top of. And that to us is super exciting. And we think that Axie was kind of like the spearhead there, but there's going to be a lot more plays similar to that.
Yeah, and I think you guys are probably one of the very few funds out there with this full-fledged thesis that only focuses on NFTs. So I guess that brings me to my next question, which is, what is your background? What got you interested in NFTs only? I know you've been in crypto for a while, but why specifically NFTs?
Yeah, so great question. It's it's basically because we were underperforming crypto markets. Sorry, we were underperforming our competitors within the crypto markets. So if you had the option, so essentially, I'll take it back a little bit. 2017 launched a crypto fund. I originally got involved in Bitcoin in 2013. 2017 launched a fund, and 2018 we realized, okay, we're out competing the market, but we're underperforming our peers. So if you had the option to invest in, this shiny crypto fund or Polynexus Capital, which is our old crypto fund, you were going to do the shiny, the cool one, right? Just because of our, there was a certain, kind of reason. There was a couple of reasons for that. Number one, we didn't have a brand. Like we didn't do podcasts, we didn't do newsletters, we didn't do blog posts, and we thought we were being very security conscious by not being super out there because we were terrified of getting hacked. And that is true. That's still still the case that if you're low key, chances of getting hacked are much slimmer that versus if you're kind of out there in public. But with that, your kind of your ability to get into great deals and have stellar deal flow is greatly diminished. And so our thought process was, we kind of we made some mistakes by not being super vocal and by not being getting out there because we were super early, and now we're suffering the consequences of that in the sense that we're kind of a middle of the road crypto fund, unfortunately. And so we were looking at in 2018, okay, what sub-market within crypto, because already by then is getting very diverse. What sub-market can we enter and become players in? Like we want to build something impactful. We don't want to be a middle of the road fund. So let's kind of dive into different sectors and see what we can build our expertise in early on and become known as those people, so to speak. So dove into DeFi 2018. We realized pretty quickly, okay, this is not really our skill set. This is a very kind of technical skill set. My partner and I, Dan Patterson, we weren't technical. We're still not technical. And so for us, we're like, okay, this doesn't really suit us. It's still really interesting. We think we're really excited about it, but it doesn't really suit our skill set. So, what else is there? Got super lucky. My wife, she's been making crypto themed paintings since 2017. And so she got really into NFTs in 2018, 2019. And, we both bought crypto kitties in 2017. We like bred them and stuff. And we thought it was cool. She thought it was way cooler than I did, to be honest. I was like, it's pretty cool, but I don't really see the bigger picture here. But she's like, no, it's amazing, blah, blah, blah. And so anyways, so my concept of NFTs back then was crypto kitties and art. I was like, those are cool, but they're not really not amazing, right? And it wasn't until she actually convinced me to go to NFT NYC, which is like the big conference in New York all about NFTs. This is in February of 2019 now. I'm still I'm primed to look for these different crypto markets, but even then I still was like, sure I'll go, but it's not that exciting to me. When I walked in there and there was like 200, 250 people there max, right? It wasn't that big. When I walked in there, the energy and like the vibes, I know it's not a quantitative feeling. It's just like kind of this sense that I got and the energy that was in that room. I was like, oh my God, wow, something's going on here. It reminded me so much of early Bitcoin. Like when you went to early Bitcoin meetups and people were like, listen, like, I don't know what this is or kind of like how blockchain is going to change the world, but we know it's going to be huge. And so I was talking to everyone at this conference and I ended up talking to one individual there for like 4.5 hours, like totally, I didn't even see like any speakers. I was like totally in this conversation. And he explained to me, he essentially gave me my thesis and the eureka moment for me, which was that NFTs enable property rights on the internet. Like that was like the thing for me where I was like, oh my gosh, like, the gears were turning. I was like, okay, so what does that mean? What does that mean? And he's like, property rights on the internet. There's 4.7 billion internet users now. So that's your total addressable population. That number is increasing every year. If it were a country, it's like one of the fastest growing countries. And these people are connected to a global and censorable 24/7 financial system, which is the crypto financial system. So I was like, wow, that's crazy. Like huge population on these like seamless financial rails. You can transact with anyone in the world instantaneously. Like that's appealing. Like I don't even know, that's a recipe for a huge market right there. But then the third factor is just NFTs, which are digital property rights. So anyone can now create tradable digital goods, instantaneously. All you need is internet. And I was like, oh my God, like you've made user generated assets. Anyone in the world can create assets, whether it be a piece of art, whether it be a video game item, whether it be a piece of IP, like whatever, right? And I was like, this is without a doubt going to be the world's biggest market. Like in my mind, it was almost the end state of markets because you're communicating on the internet, so the communication's instantaneous essentially. Being able to transact or pay someone in crypto, that's like as easy as sending email. So also kind of speed of light esque, and then you're able to create and create, trade, and buy, sell these digital goods that are unique and can represent all sorts of different things. I was like blown away. I remember being at the conference and like freaking out. I was like, holy shit, this is insane. And yeah, so basically I got home and I started researching investing like crazy. Totally, like I couldn't sleep for like 2 weeks. And it was like, this is it. This is exactly what we've been waiting for. I set up Sfermion in September 2019 and operated that with personal capital up until January of last year. Actually, that's when we launched with outside capital. So I really want to build the track record and build the back office because, launching a fund, I mean, you know this, but launching a fund is like, you can be good at investing, but launching a fund is a whole business that is like a huge pain. And So we wanted to kind of get that underneath our a solid foundation before launching with outside capital. On top of that, couldn't raise. So summer 2020 was trying to raise some capital, and NFTs were still not cool within the crypto community, and so I was just getting shot down left and right. And I was pitching a lot of crypto OGs because I thought, okay, these people have been in crypto forever. They'll definitely understand me saying, hey, there's this cool asset class. It's called NFTs, blah blah blah. And you're an early Bitcoin guy, you get it, right? And those were the people that were often like the most harsh. They're like, this is stupid. Like, why would you invest in World of Warcraft items when you could invest in World of Warcraft the company? And I was like, yeah, but like it was so logically that makes sense. You're like, okay, well, World of Warcraft the company is way bigger than the actual economy, but we've never actually experienced the World of Warcraft economy. We've never had the unlocking of that. And in my opinion, if you give people the ability to engage in commerce, and it's really through like property rights, so you give them say like, hey, you guys have rights to like buy and sell your own stuff, and you guys can kind of figure it out as you want. That is like, I mean, historically, let's look at an example of that happening. China in 1982, they said, "Hey, we're going to try out this capitalism thing. Looks pretty hot, right?" And because before that they were communist. And fast forward 40 years from 1982 onward, you can look at charts of growth, like hundreds of millions of people out of poverty. GDP per capita has risen by like multiple X's, and you've had the fastest, most amazing economic growth in the history of mankind. And I really think for me, I mean, there's a lot of reasons. Like, I mean, their capital markets were there's a lot of debt, and there's other reasons. But really, like the core component of that was giving people a large portion of people the optionality and the ability to engage in commerce, and that was through property rights. And yeah, so for me, I'm like, oh my gosh, like like the next 40 years of internet growth, and specifically talking about Web3 and NFTs, is going to make the past 40 years of even tech growth look stagnant by comparison, right? Because you're enabling the World of Warcrafts, like the company level, but you're also enabling the economic level, the actual economy within World of Warcraft to flourish. So anyhow, that's kind of long winded, but yeah, so that's how Sfermion started, and that was kind of my thought process.
Do you remember who it was at the conference you talked to that kind of sparked this entire journey?
Yes, of course. His name is Jin, or he goes by Bird, and his Twitter handle is DankVR. I highly suggest you follow him. He's like a metaverse god, and I still don't know his real name. I've been friends with him for a long time. I respect him so much, and I don't know his real name. I don't need to know his real name because we're all kind of living in this metaverse. So I just know that he's a really good guy, and he's super mission oriented. Like he's someone that could go get hired by Facebook, by Google, by well, all these different places, and he chooses to work on the open metaverse because he's like such a diehard. So, anyways, yeah, he's amazing. Still, he just talks about incredible stuff he's working on and building on right now on Twitter. So, I highly suggest a follow.
Yeah, definitely. We have to talk about the metaverse in a bit. But before that, the question that I always throw at my guests who are in the NFT domain is if you could invest in a basket of, say, the best performing NFTs over the next decade, or the basket of the best performing companies related to the metaverse in the next decade, which do you think perform better?
So next decade.
Yeah.
So next, and so it's buy and hold.
Yeah.
Yeah, so I would have to go with companies for next decade, buy and hold. What's really interesting about NFTs directly is that they have venture-like returns in condensed timeframes, and the liquidity profile of NFTs is obviously like way greater than equity or even like locked tokens. So if it was a shorter time period, my answer would likely be different. But it's for 10 years locked up, couldn't do anything. Definitely venture for sure.
Mm. That's really interesting because in one of our earlier conversations on the show with Deez Fi, who is an influencer on Twitter, I think when we talked about his framework for investing, it really just comes down to who is going to buy my NFT at a higher price. So that struck me more as kind of a shorter term kind of trading strategy versus the conventional venture like buy and hold type of strategy. So I'm really curious, like, do you have a framework for evaluating which of these NFTs is a good like 10-year type of hold? Or is that not the right way to think about NFT investing at all?
So yeah, no, so going back to what Deez said, I mean, in essence, it's like most publicly traded assets are like that. Like you don't buy Apple stock, you buy Apple stock with the idea that someone's going to buy that from you at a future date for a higher price, right? And so I'd say that most public markets have that kind of mentality to them, and it's not necessarily a bad thing. It's just like how efficient markets function. But I do think that it kind of comes with a bad rap because it's like, oh, you're not long term. And it's like, no, you could be extremely bullish on NFTs or certain assets, and not have to hold them for 10 plus years. So want to make that quick note. But yeah, in terms of NFT direct investing, yeah, it depends on which submarket, because right now there's four main submarkets of NFTs. You have collectibles, you have art, you have virtual land, you have gaming, and each one of these submarkets, they have different value drivers to them. And so, so actually, let's back up. So you start with kind of a funnel, and you're really looking at every project, every NFT project with the lens of a venture investor. So you're looking at the fundamentals. Like, what always matters is fundamentals. Let's put on that cap and focus on the actual project. So you look at the team, look at the product, the token economics, the community, the market, the data, and just general high level factors like that. And the decision that we always make is, hey, if we would not invest in this project from a venture standpoint, let's just pretend like there was an option to invest in it from a venture standpoint, then we would not invest in it from an NFT standpoint, because our strategy is we're not traders within the NFT markets. We're kind of buy and hold. And so, but I mean, buy and hold in the sense of not like 10 years out, like we're looking for like a year, 2 years, 3 years plus. And that can change on market conditions, and it should, just because these are semi-liquid assets. So, if you think if there's a certain bearish, event going to happen in the future, you should probably offload. And then if you're still bullish long-term, you can re-enter that position after. So yeah, I'd say that it starts with the funnel, look at the fundamentals, dive a little bit deeper into what specific sub-market does that project exist in. So let's say it's like a virtual world. Okay, so it's a virtual world that it's pretty cool, and we actually think of virtual worlds more like social networks versus like land, which we can get into later. But the value drivers for virtual land is location, content, parameters. So location: are you in Illinois, middle of nowhere? Are you in Manhattan? The content: are you a single family home or a skyscraper? And then the parameters is like the zoning laws. What is the height, width, length they're actually allowed to build on this piece of land? And so it's really about, okay, those are the rough value drivers for virtual land broadly. But every single project, every single NFT project, no matter if it's two virtual worlds or, and they're very similar, or two Pokemon games are very similar, that you have to dive into that specific project, figure out the game economy / game loop, figure out the investable assets within that universe, and then also develop a specific thesis off that project. So let's give the example: CryptoVoxels, Somnium space. CryptoVoxels is a virtual world. These are both two virtual world platforms. The objective is go there, have fun, socialize, interact, go to conferences, events, whatever. There's not really a set objective, which makes it so much fun. But okay, so CryptoVoxels is like a Minecraft style world where everything's kind of blocky and not a high fidelity VR experience at all. But it's still very fun, and it's kind of geared towards being able to easily create content in world, and also geared towards like events. And so our investment thesis for that specific world ended up being that, okay, we want to buy land that is near spawn, which is called the center neighborhood, because all these different neighborhoods. So we want to be near spawn because spawn has the most number of visits per parcel. And our thought process was the ability, you have the highest potential to generate revenue from your land based off of the rental income that you could achieve from those visits, and also from the advertising income. So if you set up a virtual billboard, so that was based off of number of visits per parcel, really, and that investment thesis was kind of and went like that. On the Somnium space, which is another virtual world, similar in a lot of sense, where it's relatively easy to build content. Harder than CryptoVoxels, because it's a really high end experience and whatnot. But the investment thesis there ended up being that we wanted to acquire land that was near the lake. So there's a big lake, and because it's high fidelity VR and kind of this cooler, you don't have to do VR. You can also use your web browser, but it's just like a higher graphic experience. We wanted land that was on this lake because people love to. There's assets that you could buy that were kayaks, and people love to like take the kayaks out on the lake and like go experience the sunrise, the sunset, and really have that experience with either their friends or by themselves and just kind of chill out. And that was like a different. It was a different use case that was affected by the different assets and like the actual environment of that world. Because like CryptoVoxels, yeah, it has sun, but unless they updated it recently, the sun doesn't set, and so it's always kind of like kind of sunny there. But Somnium space, there's differing environments, and also you have the kayaks, which added in a different element because you could actually go in the ocean and travel around and whatnot. So that was about lakeside land. So it's like center neighborhood based off of unique visits versus lakeside land, because you want to have that full immersive experience. So it's like these are two virtual worlds. The value drivers are roughly the same, but the actual, when you dive deeper, the investment thesis is totally different, and it's really case by case basis. Like Axie Infinity, for example, Pokemon like game where you're battling each other and other monsters, and you're earning this reward. So in Axie, you have 5 investable assets. You have, I mean, this is right now. I'm sure in the future it's going to be a lot more, but you have SLP, which is a utility token. You have AXS, which is governance. You have items. You have land. You have Axies, right? And so you have to dive into this economy, figure out, okay, what is the core game loop here? Okay, based off of that core game loop, we want to look at these investable assets now and figure out what assets will we invest in and why. And for gaming, the value driver is just broadly utility. And so the game loop is roughly like, okay, you're supposed to kill, or sorry, not kill, but you're supposed to battle monsters and you're supposed to win. Therefore, you want more powerful monsters, right? So it's like, okay, well, we're going to acquire, Mystic Axies because, they have these mystic parts which, have a slight advantage in battle or whatever, right? It's really case by case basis. And also with gaming, which is really interesting, the meta constantly updates. And so you have to kind of stay abreast of what's going on, from a high level, because maybe it's like, Aqua is doing really well, but then it turns out on this new patch or new update, Aqua is doing terrible, right? So you have to kind of revamp that investment thesis broadly. So there's a lot of moving parts here, but really it's almost venture like in its approach that you could have 2 payment companies, but the actual investment thesis could be, there are points that are going to overlap in that investment thesis, but broadly, like, the teams are totally different. The product could be totally different, and so on and so forth. So yeah, it's really about distillation from high level into more granular until you get to some sort of semblance of, okay, we feel pretty confident we're gonna make this an investment for, buy and hold long term. That being said, like, it's venture like we're not 100% certain. We're like 60, 70, 80% certain that this will play out in a certain time frame, but it's really up to the market.
Before I continue, I'd love to share more about our latest sponsor, CoinFlex. Now, CoinFlex is an exchange that's been around for a while. They're actually doing $1.5 billion in daily trading volume right now. And recently, their team reached out and walked me through their latest product, the AMM Plus. In short, it lets anybody earn fees as market makers on the CoinFlex exchange simply by depositing their assets. As of this recording, the 7-day in-range average for ETH AMM pool depositors is 82%. So how does this work? If you're familiar with how other AMMs out there work, this is very similar. You can basically select what price range to provide liquidity for, and the UI even shows you your risk under different scenarios. I also love that they have this cross-collateral system, so you can market make in any market you want, using pretty much any collateral you have. If you know how to manage your risks, you can even access up to 10x leverage while providing liquidity. So this is one of the most creative ways I've seen a company borrow elements from DeFi in a centralized exchange setting. So I highly encourage you to check it out at coinflex.com/AMM. Yeah, I think that's the clearest framework anyone has ever given on this show, kind of breaking it down into collectibles, game assets, virtual land, crypto art, and then going on from there. But I guess from an investment perspective, right, how do you decide the valuation for these things? Because, in the example of, say, Bored Apes, there is a company behind the Bored Apes NFTs as well, which is Yuga Labs. So how do you decide that, hey, Yuga Labs at this valuation is a better buy than the actual apes themselves versus the other way around?
Yeah, it's a really, really good question. So it's not one that I can easily answer, just because there's so much. I mean, we'll look at Yuga Labs, right? The fact that the Bored Apes have achieved the success that they have is a surprise to everyone. I mean, I don't think that they even thought that they would be able to reach, the floor prices of what they did, and the assets would be so successful, so popular, and whatnot. And so it depends on, from an NFT asset level, it depends, right? Oftentimes for NFT assets, we're looking at comparables. So you're looking at the most closely related collection for that, because that's a collectible asset. So we would look at CryptoPunks. And we'd say, okay, CryptoPunks are trading at X, so therefore, we could see Bored Apes trading at Y roughly, and we think that they have X much more potential increase in terms of ROI, basically going forward. But on the company level, it's like, okay, well, they've achieved this great success. What are they raising at? And I think they ended up raising at like a 4 billion, I think it was a 4 billion pre or something like that, which is, pretty crazy. I think that they ended up earning, I think, $122 million last year. So like, I kind of get it, but yeah, it's there's no answer. I wish I could tell you some formulaic like answer or some response, but it's really about, on the venture level, very, very dependent on the situation, the valuation, what they're actually building long term. And then on the kind of asset level, when we're making investment, we're trying to run through the fundamentals and get more granular there, but also looking at comparables. And I think that's that's one thing that can get me also in trouble, in the sense of like, before Azuki's, Doodles, and CloneX really kind of jumped up, uh, I didn't think that. I thought it was CryptoPunks and Apes, and they were 60 plus 100 minimum floor price in ETH terms, and looking at these other collections, I was like, wow, I think they were around 5 Ether roughly, or is it something like that? And there was a period of time where they all just kind of, those three moved in quick succession, and they broke to like, broke as in like my mental framework of like, okay, these collections are high tier, therefore they're roughly 5 Ether each and whatnot. But no, they went to 10, and then now Izuki's is trading at like 26, and CloneX is like 15, and Doodles is like 15 or whatever. So um, comparables is good because we have no other options right now, but it's not great because like we're in a world where these assets are new to 99%. 99% of people did not know about NFTs 15 months ago, and so the models that we're building here can be broken quite easily, and so you have to always be on your toes about, okay, what's shifting, where the flow is going, what's kind of the narrative here. And one thing, broadly, if you look at NFTs, there's two rough types of NFTs. There's NFTs with some sort of functionality. There's NFTs without functionality. And it's like art and collectibles often run into the non-functional use cases, and then gaming and virtual land is kind of the more functional side. And with a non-functional asset, you could just, the sky's the limit, right? Like I can't tell you that your piece of Hackatow art is not worth $1 million, right? And it's just like saying, your Picasso is not worth $1 million. Like, I don't, who knows, right? So really, like, the promises that people, and like, the promises in the mental models that people are using for non-functional assets, it's so hard. It's so hard to value. It's like valuing art. What's interesting now is on the collectible side, we're seeing the rise of people, getting involved with collectibles on the basis of utility. It's like, okay, well, I bought this Moonbird, I bought this, whatever asset. What do I get? I spend my money now. Like, I want something in return. And oftentimes we're seeing like these meta games evolve, and that's one thing I'm super excited about. It's basically game or game like experiences that are evolving without a game infrastructure. So you're not beholden to a certain console. You're not beholden to like Xbox or PC or whatever. You don't need that this build out this big game and game infrastructure and whatnot. Really, the game is like built on these key pieces of NFTs, and it's building upon itself within this whole environment. So like, I'm kind of I'm very biased here, but Cyberbroker is a product that my wife actually launched. And what's so interesting about that is that they're building this metagame in the sense that you have these assets, and the assets are the cyberbrokers. They're like these PFPs, and you can go participate in quests with them. And the quests, you can actually get rewarded for participating in the quest through like um, they drop like mech arms, which are like parts of this big robot that you're gonna like do stuff with or whatever. So that to me is really, really interesting, because you don't have to build out all this infrastructure. You have the built-in community from day one who's funding you to essentially build out the further experience for them, which adds more value going forward. And the actual kind of infrastructure you need to build this out is like super minimal. It's like you have the game engine, which is kind of a blockchain, and it's verifying that yes, you did do this action, therefore we can reward you with NFTs. So it's like this whole, you have a game loop without actually having to build anything. And that to me was like, oh my gosh, that is insane. Metagames have the potential to expand into, I don't even know how big, like as big as like the internet, right? And what's really interesting is that like, it's a whole nother topic, but people are kind of getting really, really involved with these projects from like a personal and emotional level, and they're becoming like, oh, I have the same values as Azuki's, or like I vibe with Doodles because of this and whatnot. And I think that's another that psychological effect is also something we haven't spoken about. But I think that's another huge component about NFTs is like the emotional, the social, the status that's involved in these assets. That's really driving a lot of the behavior. So it's like on top of financial incentives and on top of game like incentives, you have these emotional incentives that are like also all combining into these crazy assets that are NFTs, and that make the market just so exciting.
Yeah, and I think what is so crazy is that just because something is an NFT doesn't mean that it has anything in similar with the next NFT. But because as you mentioned, there's these collectibles that have no utility at all. And I was always astounded by just how much people are willing to pay for these individual pieces of paintings. They're almost like Vegan goods where the more expensive it is, the more valuable it is because the more culturally relevant it is. So it kind of just ends in this kind of recursive loop, which I think is really interesting. I guess if you were to only kind of dedicate your attention to one of the four verticals you mentioned, where do you see the most potential for an investor?
Yeah, it's interesting. So, very excited about all of them, but I'd say that if I had to choose today, it would be gaming. And there's a few reasons. Number one, there's 2.7 billion gamers worldwide. They are generally more tech focused comparative to like art or some sort of physical collectors. And the gaming market is something like $300 billion per year. A lot of gamers are already primed to purchase digital goods from Fortnite and other video games. And that's a big thing with NFTs. Like you can't like just convince people that NFTs are a thing. They themselves have to make the decision that, okay, these digital goods do have value. And it's a big leap for us. It's like a no brainer. Like we've been in crypto forever, but for a lot of people, it's like a big mental barrier to be like, wait a second, like why would I spend $20 on this digital sword? But for Gen Z and millennials, like they've been spending money on digital goods before and not even getting any value out of it. Like Fortnite completes some costs. I'm not getting any money from from that purchase. So with NFTs and that population that's primed to like NFTs, I think that's really exciting. Another factor, which is kind of funny, but gamers, like Web2 gamers, hate NFTs right now, which to me is like the best sign ever. Because if you look at like every single trend within gaming that's become big, like gamers have hated that trend initially, whatever it is, like free to play, just like battle royale, like all different. I'm blanking right now, but all these different game types or game styles or whatnot. Initially, everyone hates it, right? And that's just like the way gamers are. I don't really know why, but that's just how it is. And so the fact that they hate NFTs and Web3 gaming is just super exciting to me because that means we're on something big. And yeah, no, I think that most people don't care about crypto, which I know is sad and something that I didn't realize until like probably 2019. I was like, damn, I don't know if people care about Bitcoin and the dollar and monetary systems and even Ethereum, which is so cool where you can build stuff and these programmable, blah blah blah. Most people don't care. Most people are just like, I don't really care. I just want to like have fun and like enjoy my life. And gaming is like designed for all types of people to have fun, right? So my mother could play a Farmville game, my sister could play this game, I could play the shooter game, which I love, right? So it's like there's within games there's a game built for everyone, and I really do think games are going to be the thing that's going to really onboard the masses to crypto, and they're going to get red pilled by accident into understanding kind of the stakes that are broadly on the table with crypto, because maybe they'll be playing Fortnite or playing some centralized game, and maybe they'll get their assets deleted or something like that, or they'll lose access to them, or they'll realize, oh my gosh, I spent $1,000, I got nothing in return. And with NFTs, they're going to be an equal. Right now, we're not there yet, but there's going to be equal experience in terms of the game experience. That fun factor. It's going to be as fun as this Web2 game, but you can spend $1,000 and maybe that value goes up, maybe it goes down. But the fact is, you own that good, and that mental leap that people take, or that mental kind of that step that people take towards ownership. I think that's a hugely positive thing for the internet and metaverse broadly, because people say, wow, I have skin in the game. I feel attached to this. Maybe I can have some status because I'm an actual owner. And yeah, I think the psychology around ownership is going to really propel, not only gamers, but everyone worldwide to be like, wow, okay, digital goods, specifically NFTs, do have value. And I'm very excited to participate in this economy.
So if let's assume that digital ownership, it does enhance gameplay significantly, and most gamers in the world do care about this, is the thesis that eventually every single game in the world, or most games in the world, will have some NFT elements? Or do you foresee a DeFi type of situation where you still have very much the traditional kind of banking ecosystem, and then you have a completely separate DeFi thing going on?
Okay, yeah, that's a super good question. So I want to also make a note that like, you know, uh, 12 months ago, most people didn't know about NFTs. Like most people did not even know what NFT was. And a lot of the games that are being built out, they recently started. And great games take 1, 2, 3, 4 years to actually create. So in terms of where we are on that trend, it's like we're super, super, super early. And so I wouldn't like look at what we have today specifically and say, oh my gosh, the games aren't as fun today, therefore they'll never be as fun. It's like, no, these things are evolving. They're evolving very quickly, and they will be up to par quite soon, right? So that's kind of just purely based off like the fun factor. So going to your question about like, will NFTs eat the gaming market, like the Web2 gaming market, and will all games utilize NFTs? I think that if you look at everything else being equal, if you had Fortnite Web2 and Fortnite Web3, so they were exactly the same game. One, you could earn and actually potentially earn some value and buy these assets and trade these assets yourself, or you could just spend money on these assets themselves and you wouldn't be there sunk cost. All else being equal, people would prefer to actually, hey, if I'm spending money on this, I want to at least own it, right? And that's kind of that's just like, okay, basic. All else being equal, NFTs are better. Let's pretend like the user experience is better and it's frictionless and whatever. So that's kind of there. And when you zoom out, if you look at like, well, I own this water bottle, I own this computer, I own my chair, and if someone came in and like took it from me, I'd be pissed off and like that'd be illegal. Why does that not exist on the internet? Like I want to be able to own my stuff on the internet, just because I'm spending a lot of time here anyways. Like, I mean, I'm kind of a degenerate. I'm spending like 13 hours per day, like on my computer. But most people, like Americans, the stat is like 7 hours per day, more than 7 hours per day is spent online. So it's like through smart TVs, that's through phones, that's through computers. They're already living in like the quasi metaverse, like this already virtual environments. Really, it's just not very immersive. But like they don't own their stuff there, and I think that there's going to be a period of time where they're like, wait a second, I can't believe we didn't own our stuff inside the digital world. Like it makes absolutely no sense. So long-winded way to answer your question that I do think long term, all games and all kind of digital platforms broadly will utilize NFTs in some form.
That makes a lot of sense. And it's interesting you bring up the point about ownership of physical things like your chair and so on, because I think one of the types of NFTs that you didn't mention, but you did write about before, is things like domain names or insurance or property titles, which are things that I guess already exist in real life outside of the metaverse, but these are things that can easily be tokenized and have a very immediate use case, even for diehard DeFi people who might not get NFT. I think things like insurance and property titles are things that are very easy to convince them about NFTs on. But I like to kind of take a step back because we've talked about the metaverse a few times now in this conversation, but we've never really defined it. And I think for a lot of people, most people have different definitions. So some people think it's a virtual world and it has to be in VR. It has to simultaneously host like a billion people, just like Ready Player One. Some people think it's just a game. Some people think maybe it's a virtual e-commerce environment. What is the metaverse to you?
Yeah, I make it super easy. The metaverse is just the internet with ownership. Like that's it. And there's going to be a lot of people that have different definitions, as you mentioned, and people are going to say no. But like, how do you easily define the internet? Like the internet is kind of hard to define. It's like, oh well, it's this like network of computers and everyone's connected and blah blah blah. It's like for me, the metaverse is similar in the sense of connectivity, but it's just the internet with ownership, and that's kind of what the metaverse is. It just so happens that NFTs and crypto and Web3, and blockchain, actually, if we're being specific here, blockchain is the best technology that enables that ownership. So like maybe in the future it's not going to be blockchain. Maybe it'll be like distributed ledger. Like I know that there's a big period of time where like distributed ledger, I forget what it's called. It's like DAGs,
Yeah.
decentralized.
Directed
Yeah,
at
there's like a
epic
DAG wave.
graphs. Yeah, yeah, yeah.
Yeah. So there's like a DAG wave. So like maybe in the future DAGs come back and like DAGs are like the best actual form of ownership on the internet. And then I'll be like, hey, you know what? DAGs are actually the best way for ownership. Like that's what it is. The metaverse still exists. It's still about ownership. It just so happens that the technology is different. But we'll take a step back. Like it turns out blockchain is the best way to have ownership on the internet. Therefore, the metaverse is just the internet with ownership. And Web3 is like, because of that, Web3 is an integral part of the metaverse actually coming to fruition. It's actually like a requirement. You can't have a metaverse like the Facebook metaverse or like, who knows what Google metaverse, whatever big corporation. That is not going to be the metaverse. That's like the dystopian, reality, or the dystopian, like kind of every book and movie that we've read about the dystopian, this evil organization, like that's what that is. And so for us, like the only way forward in terms of an actual metaverse forming and being something that people want to spend their time, money, and kind of lives in is one that enables true ownership. And then just so happens that blockchain is that tool that enables that.
Yeah, I don't know if you saw that news about Facebook, I guess now Meta, trying to charge, I think it was a 40% tax on all, uh,
47.5.
40, also
Crazy.
almost 50% take rate on all transactions happening within the metaverse, which is insane. I think that kind of calls for the need for an alternative, which is completely open. And I actually did write a thread about this, so maybe our team can link it in the show notes below. But I feel like the fact that social networks are dedicating billions of dollars into developing this means that an open alternative needs to happen. Otherwise, we're going to end up with the same situation that we had with Web2 social networks. I'm curious if you kind of share that sentiment as well.
Yeah, so it's not necessarily, that fee is egregious, like that's insane. That being said, like I mean, if I'm an artist, and I am in artist and like in Web3, I can choose whatever secondary I want. I can say, hey, I want to do a 90% secondary fee. Like you can do whatever you want. Like it's what I love is like you have the choice. And that to me is like what this kind of the metaverse is about. It's like you have the option to participate or you don't have to. And with the Facebook metaverse, if we're all in there, like we're going to be forced to do things and forced to KYC and forced this and forced to blah blah blah. And I don't like that. I like having the ability to go move to this free area if I want, or maybe the economic activity in this kind of communist system is also great. Like the Facebook world, I kind of calls it communist. Maybe I want to go work in there for a little bit, but I think just having the optionality is super important for a healthy metaverse to actually form. Like if the metaverse is one platform, then it's not the metaverse. Like that means we've failed and it's not here. But yeah, so I would say that it's not necessarily the fee that's the bad thing. It's just that like Facebook broadly is been known to lie. They their dear leader Mark Zuckerberg is also known to not be super honest at certain points in time, and they've been caught for doing a lot of sketchy stuff, and I don't really want that entity or organization or person like leading the quote unquote metaverse. I want someone more like Jin or Bird, as I mentioned before, like someone who's mission oriented, who's really focused on making things open, interoperable, and again having that optionality for people to enter or exit whenever they want, wherever they want.
That makes a lot of sense. And I guess for the metaverse thesis, because right now it does seem like it requires a confluence of quite a few things, right? For instance, for VR, we have some semblance of product market fit already with technologies like the Quest 2, which I actually just got my hands on one, and it's been really fun to play around with it. But the price point is still pretty high in terms of VR hardware. And then in terms of compute power, for MMORPGs today, I don't think we can process more than 10,000 people in the same instance. We still have to split them into different silos. So it's not quite Ready Player One yet, where we have 7 billion people at the same time in one instance. So does your metaverse thesis require all those other thesis to also play out as well, or do you see the metaverse thesis potentially playing out without the need for VR taking off, without the need for some massive supercomputer that's able to compute 7 billion users at the same time taking off?
Yeah, it's a really good question. So, I'm trying to come up with an analogy on the spot here, but like, I would say that it's almost like the rise of human civilization. So I would say that right when we had, I don't know, apparently, human society started in like ancient Sumer, which is like in Iraq and modern day Iraq essentially. And apparently, I don't know if this is real, but suddenly everyone started farming. So everyone's like, "Whoa, farming is the shit! Like we're gonna start farming with this XX food. Like we're gonna now specialize and I'm going to work on pottery and you're going to work on spears and we're going to make this great civilization," right? So like that's in the stage where we are when in terms of the metaverse creation when blockchain was created. It's like, okay, wow, we now have the ability of real ownership on the internet. Boom, okay, we just started farming is like the equivalent thing. And therefore people can now kind of work on all this other different aspects of quote unquote civilization within that. Because I'd say like Bitcoin was like, okay, that's like the farming. Then Ethereum was like, I don't know, being able to like make stuff, pottery and whatnot. Who knows what? Like I need to work on this analogy. I'm just coming up with it now. But I think that that's kind of that's where we are. It's like the seed was planted, and now we have a lot of things spawning from Bitcoin. Like that's like the origin, and we're still in like early civilization. We're not even in the dark ages yet. We're not even in like the Renaissance or whatever. We still got a lot more to go in terms of the metaverse's evolution. And I really think that it goes back to that seed being planted forever ago through Bitcoin with blockchain, and now we're seeing just countless things spawn from that, and people specialize and people focus on different areas and people building and building. And so it's gonna take a long time. Like I'm very naive and totally incorrect in all my like kind of predictions here. I remember in 2017 when we were doing our crypto funds, I was like, oh my gosh, 2019, like 2020, everyone's gonna be using Bitcoin. Like everyone's gonna be using this because now everyone knows about it. No, it's like not how it works, right? And then with NFTs, I think I was on I forget what podcast I was on, but I was on a podcast in 2020, and I was talking to it was Bankless, and I was talking, and they're like, "When do you think NFTs are going to really take off?" And I was like, probably like 2024, like just like and like it turned out 2021 was like the year that everyone like knew about NFTs and went crazy. So I think that these things take time. They're really narrative driven. They're really driven by capital. They're really driven by talent. They're really driven by people building new things. And I have no idea like on what way it's going to evolve or how fast, how slow, and whatnot. But I do know like this is where we are. We're at the start of the start of this entirely new market that didn't exist before, and it's going to really bring billions of people online and cause billions of new small businesses, entrepreneurs, and massive value creation. And I want to be a part of that. So that's kind of like broadly how I think about it. But in terms of like timing and like how and where and why, like I it's really tough to actually make solid predictions about that.
Yeah, I appreciate that. I think timing specific theses has always been super hard. But as long as you're directionally correct and betting on the right founders to kind of carry out that vision, I think it all kind of works out in the end. And I know we focused a lot on NFTs and Metaverse this time, and we didn't really have time to talk about NFT infrastructure. So I definitely did want to make some time to talk about that. So I think in the past 12 months, I've probably seen maybe 2 dozen NFT lending protocols. And I think you mentioned that in one of your tweets that NFT lending only has 1% penetration of the trading market for NFTs. So I'm curious, like, why do you think that is, and what needs to happen for NFT lending to become, say, as big as DeFi now?
Yeah, okay, this is a great question. Okay, so for NFT lending specifically, the issue right now is the architecture of these platforms, in my opinion, right? And like, who knows? I could be totally wrong. Probably am, right? But so I think that right now, in order to be an effective participant on a platform like NFTFi, which by the way is amazing, and Arcade, by the way, is also amazing. Like these are incredible platforms run by exceptional founders. But in order to be an active participant there, I, as a user, I need to know the rough fair value of this Bored Ape or of this CryptoPunk or of this, CryptoVoxel parcel or whatever. And it's really difficult. It's, not many people in the world right now have that specific knowledge. In the future, there's going to be tons of people that have that knowledge and really, really, oh, I know exactly how much this actually costs, blah, blah, blah. But right now, it's a very, very small portion of users, right? We're talking about, in terms of total number of people that have interacted with OpenSea, which is the largest NFT marketplace, 1.5 million total, right? Which is crazy, right? So if you're taking out of that 1.5 million, how many can go to NFTFi, identify assets that they know specifically how much it cost, and be willing to lend out that amount of value, or roughly that amount of value? Like if I look at a Bored Ape, I'm like, okay, that's worth 100 ether. I'll lend him 90 ether for 30 days. Like that seems fair to me. And I'm taking, like, then you have to take into the volatility of Ethereum, and like, oh my gosh, like in 30 days, is Ethereum going to go up or down? And so there's just a lot of hurdles right now, but there's a lot of, everyone is working on models to make that process simplified. And yeah, that stat that I tweeted out, that was actually from a podcast that I did with Connor and David from MetaStreet. And MetaStreet is this really cool entity. It's a DAO, and what they're doing is they're being like the most active participants on these lending platforms and protocols. So basically, it's like they're acting as like it's almost like a, what's a good DeFi analogy? It's like Yearn, where like you give them capital in this DAO, and they, with their experts and their expertise, they go out and they kind of do the lending for the DAO itself. And so you're just like generating that yield from that process. That to me is really exciting. I don't know if that's going to be the future of how it's going to go. I still think there's going to be a lot of room for individual participants that are experts in certain domains, just because the market's going to be so broad. But I do think one thing that David said that was super interesting. He's like, listen, DAOs will end up being utilities. So he's like, we are going to be a utility that is going to be the lender for all these different platforms and protocols. Oh my gosh, it's a good monopoly. I forget how he phrased it, but if it's doing a good function, but it is a monopoly, like it's just a very effective, always offer the best rate and blah blah blah. Like that is great for markets. Like it is a very efficient way for markets to evolve when you have this participant or utility, kind of like electricity or whatever, that's just providing that liquidity, whenever you need it. So anyhow, yeah, to answer your question, that was long winded, but like I think that's kind of how the issue with NFT lending platforms today. That being said, everyone knows those issues, and they're all working towards figuring out solutions.
Interesting. So bootstrapping liquidity through DAOs like MetaStreet, that seems like one of the big trends that not a lot of people are talking about. So I'm super excited to dive into that. Actually, we did have Steven, the founder of NFTFi or NiftyFi, on the show, and he did reference that these DAOs are increasingly generating more volumes for NFT lending. So I'm really interested to see how that goes as well. I think we're coming up on time here, Andrew. So I want to make sure that we have time to plug your social. So we've shared a lot of interesting insights here. I'm sure there's a lot more where that came from. So for people who want to check you out, what are the best channels to do this?
Yeah, thank you. I would say that best channel is Twitter. My Twitter handle is Andrew Steinwold. It's Andrew and then last name Steinwold. And yeah, you can just follow me there, DM me, and I try to be responsive. But unfortunately, sometimes I'm not, but I try to be.
Awesome. So we'll drop those in the show notes below. And thank you once again for coming on the show, Andrew.
Thank you so much, man. Appreciate it.